And welcome back to another episode of the Blockchain Brew Show. I'm your co-host, Trent, and I'm coming to you today by myself, which feels weird for me normally if we do this. Tyler runs solo, but Tyler is checking out the county fair with his family tonight, so hope they have a lot of fun, and it's a great family thing to do for the kids. So yeah, I hope they have a blast. Let's see who we got in here. John Foster Crypto, thanks for joining us today. That's right, smash the like button. And for anyone who's not subscribed to the channel with us, as you already know, we might not be the biggest, the best, or the brightest crypto community on YouTube, but we are definitely the most hydrated crypto community on YouTube. So subscribe to be part of the Brew Crew. Today, I'm bringing you guys a Spirit Rumble from Monkish Brewing Company. It's a hazy dry hop double IP, coming in 0.5% ABV. Finger red number one. Okay, well, ready for hopping on with us today. Here's our ASMR pop. Give you another look at the can art there. Spirit Rumble, kind of like the rumble that Bitcoin is having right about now with the 4-hour 200 EMA, right? Or as opposed to our rich. By the way, if you yet, it has a nice Cardano logo right there. I got this from Rare Evo, from Ryan. He had a booth at Rare Evo featuring his project that he's working on called Hops on Cardano. And it's right up our alley here on the channel because it's a blockchain meets the craft beer industry. And he's doing something really cool where people will be able to, sort of use an app kind of like Untapped and be able to go in and rate a beer, review the beer, leave comments about the aroma, the tasting notes, the profile of the beer. And for using the platform, it's kind of gamified, tokenized. People can get rewards by participating, and breweries can also earn tokens. So yeah, there you go. And the breweries can actually buy like an NFT to help increase their rewards and feature their business and stuff like that. So here's the poor as opposed to the rich. All of us are the poor if Bitcoin dips too much further, right? Got this nice TQ glass, about 2 inches, about 2 fingers on the head, and okay, this one's good. It's like really over-ripened mango or under-ripened mango. Under-ripened mango juice with a lot of hop character, a little bite, a little bitterness on the back end. It has a thick, creamy, viscous mouthfeel. And the aroma, I don't have the best nose, but the aroma, you just get like green grass and floral, Solid beer. I'd give it about an 8 to an 8.1, somewhere in there. It's really hard to get me to rate something much higher than that. One time I rated an IPA an 8.4, and that's the highest I've done on the channel. So, without further ado, welcome Muffhead. He says, yo. What is up, Calvin? Calvin said, Bitcoin holding $112,000. Crazy to think that we're bitching about it. Exactly, my guy. Let Trent know. I am Trent. But I see how you probably thought I may or may not be on. Let Trent know that I bought back into ADA, same price I did back in 21. Let's go. It's all good. Love you guys. Love you too, Calvin. You know, my first ever purchase of ADA was also back in 21, and it was not a good entry. I mean, it was at the time, but I bought it about $1.08. And the thing about that is, I wrote it up more. We had that May crash, right? And so I bought some more down at around 89 cents, 90 cents that year. But I rode that all the way up to $3.10, and I didn't sell. I rode the bag back down. I round tripped it. And the thing is, through the bear market, Cardano is the highest conviction coin that I continued to DCA into, and I bought so much around 24 cents that even though my very first buy was 1,000 ADA for $1.08, I was able to get my average entry price all the way down to about 30 cents. Yeah, I'm stoked about that. And that is the power of dollar cost averaging and the power of conviction. So there you go. Now, without further ado, is our news segment. Crypto news. What is affecting the market today? Let's see here. Well done, brother. Thank you, Calvin. Thank you. And well done for you too. You're gonna kill it too, my guy. So I'm gonna bring the music down here because I'm gonna share a video with us over on Twitter. I'm not really a big, I guess I have to share my screen first, huh? And that would have been bad because Tyler's not even here to tell me that I'm doing it. And then I would have been off of this screen completely, so I wouldn't have seen your comments either. So yeah. Let's see, share screen. X, let's go. And I also have to add it to stage. Who would have known? Okay, so I'm not a big Coin Bureau fan, but he did put this clip up that I want to comment on here. And his post says, one cut equals big rally. Wells Fargo, Michael Shoemaker, says that if the Fed cuts rates in September and Powell downplays more easing, markets won't buy it. Traders will price in a full easing cycle. Bonds pump, equities rally. Once the genie's out, Powell can't put it back. And I agree with that take. I think that if they cut one time, even if they don't cut again for the rest of the year, like the market is going to price in, through the October rally, more cuts to come. And we're going to have a bullish Q4, I believe, just about no matter what. So let's.
If we get a 25 basis point, 0.25% rate. If we get a 25 basis point, 0.25% rate cut, and then no talk of more rate cuts, does that matter to the market?
It does matter to the market, and here's why. Let's say that Powell comes out, not Friday, but Sep 17, Fed goes 25. He takes the podium at the press conference and says, well, look, we're not going to do this too many more times. Trust me. Nobody's that good a salesperson. The market's going to say, hey, guess what? Now we have an easing cycle. They're going to be more, 2, 3, 4 more rate cuts, whatever the number is. We in the market will price more of that. Bonds will run, equities do well. I don't think Powell can really put that genie back in the bottle. The Fed may turn out to only do one cut, but that's not the initial market move. It's a big rally.
If we get a 25 basis point, 1/4% rate cut, and then.
Yeah, I really agree with that take personally. The reason why is just like the commentator said, a cut is going to mark in the mind of the market, okay? In the mind of the market, a cut will mark a shift toward an easing cycle, right? Quantitative easing versus quantitative tightening. And the first step to quantitative easing is a loosening of the monetary policy, right? We tend to think about quantitative tightening as rate hikes and no injection of capital into the market, no stimulus, not you're making money harder to borrow, and you're also not putting stimulus packages into the economy. You're not printing, right? And we tend to think of quantitative easing as printing money. When it comes to easing, we think about it solely in terms of printing more money, right? Money printer goes burr is the meme. However, the first step toward quantitative easing is a loosening of monetary policy. The Federal Reserve is the entity that is responsible for making monetary policy. So once the Fed goes from stagnant rates to a rate cut, that is a loosening of monetary policy, and it's one step closer to quantitative easing or money printing and stimulus, right? It's one step closer because money is cheaper to borrow. So, the Fed has a dual mandate. The dual mandate of the Federal Reserve is to achieve maximum employment while maintaining prices of goods and services for the consumer at a rate close to 2% inflation. So that's their dual mandate, is the job market and inflation, right? And the thing is, the only thing that's kind of hawkish we had, and if you're not used to these terms, right, we talk about bullish and bearish, right? Bullish and bearish is a reference to price action in markets that have candlestick charts, right? Bullish means price goes up, bearish means price goes down, right? And this is just in case there's any new people that come in here. Dovish and hawkish is the way that we talk about policy from the Fed. We say that positive news from the Fed is dovish because it's a soft landing, right? A dove lands softly, as where a hawk lands aggressively. It lands with intention to consume its prey, right? So, that's why, dovish, hawkish. Well, the Fed, when it comes to easing monetary policy, the Federal Reserve has like I said, a dual mandate. And the only hawkish news that we've had so far from the minutes and from the data is the PPI, the Producer Price Index. You have two main ways that they monitor inflation: the Consumer Price Index and the Producer Price Index. The Consumer Price Index is was 124K at the top. I do not believe so. The Consumer Price Index is the cost that's passed to the customer. And Muffhead and I were talking in the Discord earlier. I'll go ahead and hop over there. Let's see, share this tab instead. And, you know, this is what Muffhead said earlier in the Discord. He said, I was playing with some numbers today. I think the real rate of inflation is around 6.8%. When you factor that in, I think the prices we should see in crypto should be beyond expectations. This is true because if the dollar is losing purchasing power, then anything that's not fiat, anything that's a commodity, anything that's valuable goes up against the dollar. Now, we don't want terrible, out of control inflation to be the primary reason for our crypto pump, right? We don't want that because, yeah, we sell off our crypto at high prices, but the fiat that we're cashing out into is increasingly worthless, and the country that we live in, you know, maintains a poorer quality of life over time. So we don't want runaway inflation to be the primary reason for a pump. However, in the short term, I mean, whatever it takes, I guess. And so I said interesting stuff. We do know that the Fed's numbers are BS. They don't represent the truth about inflation at the cash register every day. And our friend Muffhead over in the Discord gave some interesting numbers. He said, this is the last 10 years of data I used. Housing up 12%. New cars up 2.6%. Auto insurance up 6%. Childcare up 5.6%. Medical care up 3.4%. And so the total the average that you end up with is a 7.33% inflation rather than the 2.7% that the Fed tells you in the consumer. And here's what I thought was funny. He said these metrics were important to me, and the metrics used by the government are things like space, corn husk, motor oil, and grapes. You know, when you cherry pick your data, it doesn't really matter, right? Like this is true about any set of research, right? When you cherry pick your data, then I don't care about the outcome, right? I want to see what inflation comes out to in the top concerning areas for consumers. JG says, dip at the end of summer, then the economy, money flows accelerate all the way into the last week of December. Dip in February until May, and then we go again. I've seen this all my life before crypto. Got you. Well, that's a mouthful. By the way, JG, I was in the Discord giving everyone access to post pictures, and when I tried to click on yours, it was something was up with your profile. I don't know, but you know, hop in and let us know you're there, and you'll be able to post some pics. Dip at the end of summer. You see, here's my concern. You know, February until May, we go again. I mean, I don't know about that. Not if we end up in a traditional bear market. That's the thing. That's the sure, thank you. Yeah, so that's the outlier here that's, you know, gonna not throw everything off, but that's the live data that we're waiting to see if any of this changes is do we get a traditional bear market or do we get an elongated cycle? But your outlook for 2025, I tend to agree with this. You know, fun fact, Bitcoin has never had in its history a green August and a green September. So if we get a red August, I actually tend to think that we might get set up for a green September, October, November, and December. You know, and if we get a green August, I think that pump might continue into September. And this is the one that I think actually might be more likely, believe it or not. If we get a green August, I think that we may sort of pump, you know, into September. Maybe we get a rate cut and and we sort of fly after the rate cut. But if September starts really, really high, maybe we get a red. I don't know. I think it's more likely that we get a red August somehow, and then a green September. I don't know. Trust me, bro. I've done sales all my life, retail. Yeah, I get it. As a guy in telecommunications, the amount of resumes I've received over the past month by cellular and state employees is alarming. Yeah, that's true, and that, you know, that's a good point, Calvin. Thank you for saying that, because that's the other part of the Fed's dual mandate is achieving maximum employment. And I really think that the jobs data is about to come in hot. I think that the jobs data is going to show a very constrictive job market. B2B, business to business sales. Okay. Yeah, I get you. Sorry, that's my my mom calling me. I gotta end the call. Yeah, so maximum employment, I think that jobs data is about to come in hot, and it's about to reveal a very troubling situation in terms of employment. Muffhead says, we know that they are lying. They know they're lying. They even know that we know they're lying. We also know that they know we know they are lying too. They of course know that we certainly know. They know they know we know they are lying too as well. To and as well are saying the same thing. You're really making this hard for me to read. But they're still lying. In our country, the lie has become not just moral category, but the pillar industry of this country. Hey, there you go. So tomorrow, everybody is rich around Christmas. That's true. Tomorrow, by the way, I plan to stream the Jackson Hole Summit. So when Jerome Powell speaks, I plan to be here at my desk streaming it on the channel. And that, I believe, is 10 a.m. Pacific Standard Time. So, 10 a.m. Pacific Standard Time, I should be here at my desk streaming that, unless the Jackson Hole event is at some other time, which what will happen is I'll go discover what time it is for sure after the stream, and whatever that time is when I'll be live. So there we go. Let's go ahead and jump into some charts. Charts and TA. Share this tab instead. So DCA and Prey, he says, was 124K at the top. And my answer is categorically no. The reason why, guys, we still are going to have rate cuts. The Fed Watch tool is still coming in at 80%. And look, Powell could be hawkish tomorrow, and that could drop those odds, but I don't know. I still think employment data is going to be tough at best. And to achieve their dual mandate, they're going to have to cut rates. They can't. I think 130 is the top. IDK, we're so close. I don't think so. Here's the thing. They have to cut rates at some point. They just have to. And they don't have to because I say that they have to, or because I'm full of hopium, or because I have a bullish bias. I do have a bullish bias. However, they have to cut rates. Like the place that interest rates sit at right now is unsustainable. It's unsustainable for the job market, right? Every time they cut rates, the market will dump. That's not true. Go back to September of last year. September of last year was of 24 was the first rate cut that happened after a series of 150K to 200K around Christmas. Mark my words. You know what? If you guys give me a minute, I can't. I'm not a good multitasker. I can't talk and think at the same time. But I'm gonna paste a video in the chat. This was a script that I wrote for BitBoy last year, and this was one of my most researched scripts that I ever did. And I did not use an iota of ChatGPT for this script either. I say for this script because I did use it. I used it a lot for hooks and stuff. But if you give me a minute, I'll pop over to his channel and I'll go find that. It's just like I said, I'm not a good multitasker, so I can't really continue to talk about my train of thought as I go find this. But here we go. Let's see. Man, I don't like typing his channel name in and seeing these crazy pictures of him these days. Let's see. Okay, I got it. So here's the link, and bam. I think you'll find that to be a really interesting video, and the data is a little different. The reason why it's different is because that particular script deals with what happens after the first rate cut comes in the aftermath of a long series of rate hikes. So you have a series of rate hikes moving to neutral, and then you get the first rate cut. And in that script, I went back to data from 1981 from 1981 until now, and looked at what happens what happens to risk on markets every single time that the Fed moves from hikes to neutral to cuts, and what happens after we get the first cut in a long period of stalling. Now, I could make an argument that this juncture that we find ourselves in right now is sort of similar to the last to the cut that we got last year, because we got that cut and then we've almost had a whole nother year of pause. So it is kind of like we're getting the first cut after a very long stall. It's just the main difference is that we're not getting a cut after hikes. Okay, so that's important. But the video, just in case, I don't really think, I don't know if I think it's the best use of our time, but if someone wants me to just play that video right now and then sort of respond to what I think about it, I'll just play it right here. And I guess I'm not monetized yet. There's nothing stopping me from playing his video. There's nothing stopping me from playing any YouTube video on the stream, really, as long as it doesn't take up do it, nerd. As long as it doesn't take up like half of the stream or more, right? So yeah, why not? Why not? I'll just do it. Let's see. share this tab instead.
Find out where the price of Bitcoin will move in September. The years were 1981, 2000, 2008,
Okay.
and 2019.
Here's the video.
Years that shook the world and left lasting scars. What if I told you that hidden in the events of these years lies the key to unlocking Bitcoin's fate this September? Picture it. A time when Indiana Jones battled ancient relics. Y2K sent shivers down every corporate spine. Iron Man soared into the skies, and Game of Thrones burned kingdoms to the ground. Yet none of those epic moments matter here. I'm talking about something even more epic. The Fed interest rate cuts. What they decide next could change the future of your portfolios. Spoiler alert, it's probably not what you think. Let's get it. I'm not a financial advisor. Welcome to the channel. I'm your host, The Bit Boy. If you want to learn more about crypto, make sure to hit that subscribe button. If you find value in this video, make sure to hit the like button. I think you're going to. Stick around until the very end of this video. Also, if you want to find out where I think Bitcoin will move with September's rate cuts, or just wake me up when September ends. The Fed began aggressively raising interest rates in March 2022 to combat inflation, marking the start of the current rate hiking cycle. Over the course of 2022 and into 2023, the Fed raised rates multiple times, bringing the federal funds rate to its highest level in decades. As of mid-2024, the Fed had paused further rate hikes, but has not yet cut rates.
The anticipation is electrifying, with markets seemingly waiting on the edge of their seats for the prophesized moment where Jerome Powell walks across that stage to his podium and declares those magic words, the Federal Reserve is cutting interest rates.
Odds are favoring a 25 basis point cut this month. The question is, how should we expect the markets to react? First, let's go back in time and look at the way risk-on markets were affected when the Fed pivoted to cut rates. Bitcoin has only existed for one of these pivots, so I'll have to use the S&P 500 for the closest case study. But don't worry, I'll get to Bitcoin too. In 1981, after aggressively raising rates to combat inflation, the Fed began cutting rates. Initially, there was a sharp decline in the stock market as high rates caused a recession. However, as rates were cut further, the market rebounded strongly, leading to the bull market of the 1980s. Now, how about Y2K? The Fed had raised rates throughout the late 1990s to cool down the dot-com bubble. In 2000, the Fed pivoted and began to cut rates due to the looming recession. The market continued to decline after the first few cuts, as the tech bubble was still unwinding. It would take several years for the market to recover. The S&P, well, it saw a sharp decline of nearly 50% from 2000 to 2002 before the market eventually rebounded. Then there's the global financial crisis of 2008. After a period of rate hikes, the Fed began cutting rates aggressively to combat the housing market collapse and the ensuing financial crisis. The stock market experienced significant losses, even after rate cuts. The S&P 500 plummeted, losing nearly 50% of its value. At the time, many thought it was game over. For those who held their nerve, saw the market soar back in 2009. So what have we learned so far? Rate cuts were supposed to be the hopium the bulls have been waiting for. But according to history, it seems like Fed pivots toward rate cuts are actually bearish. This is only half the story, though. Rate pivots in 1980, 1984, 1989, and 2019 could actually be seen as bullish. Within 6 months of the first rate cut, these pivots resulted in anywhere from 10 to 26% returns on the S&P 500 for an average of a 14.64% gain. That's like a 1,478,000% gain in crypto. Am I right? What's more is that although the market slumped a little immediately after each pivot, it took anywhere from 5 to 20 days for the index to reach its local bottom. That makes for an average of 11 days from rate cut to price bottom. Let's zoom in on 2019. Well, after a series of rate hikes following the Great Recession, the Fed reversed course, cutting rates in response to concerns about global economic growth and trade tensions. Initially, the stock market reacted positively to the rate cuts, as it helped extend the bull market that started in 2009. However, the COVID-19 pandemic in early 2020 caused a sharp crash. The S&P 500 performed well after the pivot, rallying from $3,013 on July 31st, 2019 to $3,380 on February 19th, and one of them was roughly a 13% gain. That's a face-melting rip for stocks. But we're not just here to talk about stocks. Let's bring it back to what really matters for crypto investors. Bitcoin. History doesn't just repeat itself, it rhymes. Bitcoin is volatile and tightly correlated to its halving cycle. Immediately after the rate cut in 2019, Bitcoin went on to rally almost 30% from $9,592 to $12,325 in just 7 days. Now, there was still some bear market left to go as the halving wouldn't come until May of 2020. So Bitcoin would go on to retrace all of those gains, going even lower to the $6,000 level. Infamously, during the short-lived March COVID crash, it would drop in half to the $3,000 level. The lesson here is the adage that investors see every past bear market as opportunity and every price dip in the market as the end of the world.
So I'm going to pause it just for a brief moment. So far, here's the way that data have to now take crypto into the data. And here's what I love so much about this video, besides the fact that I wrote it. But you deal with all of this data from 1981 all the way through the stock market, or through the financial crisis of 2008. What's up, Do Not You? Welcome in. All the way through the financial crisis of 2008. But then once Bitcoin is, number one, exists, and number two, it is here to command the attention of society as an asset. Okay, we have two very significant Fed pivots in Bitcoin's history. We had that 2019. I'll back up the video a little bit. Have this one here, July 31st, 2019. And this was in the middle of the bear market, guys. Right? The Fed pivots, and we have immediate green action. From about $9,000 to breaking 12 grand. I mean, that's a big move, especially in a bear market. And because of the fact that Bitcoin was in a bear market, that rally post pivot was not sustainable afterwards, right? But then when is the other very significant time that hey, what's up G Square? Hey, were you wanting me to send you a link, or are you just saying hi? The other very important moment where we got a pivot in Bitcoin's history was last year. And in both of those scenarios in Bitcoin's history, we got a massive pump. So that's why earlier in the script, it said, yeah, like what historically the Fed pivots, and then we get a dump first, a large dump first, and then a pump. But that's why that's only half the story. DCA and Prey says, so if the Fed pivots during a bear market, we pump. But if it pivots at a market high, what do you think happens? Bitcoin is in a market high right now. Yeah, but Bitcoin was also at a market high September last year. I mean, Bitcoin broke all-time highs prior to the halving even. So we're in a very confusing time for Bitcoin's market structure, because Bitcoin usually has an 18-month-long bull run post-halving, and it's already been 18 months of Bitcoin in a bull run, and it started pre-halving. So I don't know. We were at a market high when it happened last year too, and we've had a very long period of consolidation this year. And so I think that has given us the fuel that we need in order to sustain another big rally. So I'll let the rest of the video play out, because why not? It's only less than 2 minutes.
Wouldn't come until May of 2020. So Bitcoin will go on to reach all of those gains, going even lower to the $6,000 level. Infamously, during the short-lived March COVID crash, it would drop in half to the $3,000 level. The lesson here is the adage that investors see every past bear market as opportunity and every price dip in the market as the end of the world. So what do we learn? Well, rate cuts are typically bullish for risk-on assets, but the market's immediate reaction depends on the broader economic environment and investor sentiment. The major difference always boils down to this: what are the prospects of a looming recession? Whenever the Fed has cut rates ahead of a following recession, the S&P 500 would suffer, not because of rate cuts, but because of the recession they were trying to combat. Whenever there's a soft landing or a positive economic outlook, the market reacts bullishly to the first rate cut.
It was just
After all, rate cuts mean
cycle,
that is
but that's
cheaper and
what
investors' pockets are fuller.
That's
Maintaining a soft
pivot
landing
is.
can also mean turning the money printer back on. At the end of the day, those in control will move the sentiment in the direction they want the price to go. When Jerome Powell speaks, whether he's dovish or hawkish, will show where the puppet masters want to move the market. Personally, I expect a bullish reaction to the rate cuts, given a soft landing is projected for the economy. But remember, for the
Well, there's a reason I'm playing this video particularly, and I get what you're saying. I really do. I do think that he's the most misunderstood person in crypto. I do think that he lost all of his public credibility. I can't say anything about the future. Anyone can turn around and God grants repentance to anyone who wants it. But look, I get. I don't know if you've been here on the channel when we've talked about this, but the reason I'm playing this video in particular is because I wrote this script myself. I had worked for him, and it's not we don't make a big thing about it. We do share it from time to time to be transparent with the audience. You need to read between the lines. This is right, exactly. And T Square had worked with Pluto Alliance as well. So we have some history here, but we were never one of the many people there that clamored to be on camera. That's the reason why we can get on YouTube now and no one knows who we are unless we say something about it, right? And the reason why I never really wanted to do this on YouTube. I was content having fun writing scripts. Not Misunderstood guys, a sellout. Would only push whatever coins paid them the most. Also went to publicly hate on Cardano, one of his highest regarded and well-researched coins. No credibility. I get it. By the way, I never wrote a single bad script about Cardano. He wrote that stuff himself. I was because I don't write things I don't believe. But also, here's the thing, and I'll move on from this video. But the thing that I'm trying to let me see here. Come back to Trading View and turn the music back on. The thing that I'm trying to point out was the way that the script dealt with rate cuts. Let's see. I don't know why the music is not coming back on. Oh, it is. It's just my monitor. So I can see the videos. All my bad for no. Look. Do not you. It's not an interruption. I guess the play really triggers me. Well, look. I mean, I get it, man. I get it. We worked for him, and my wife and I lost half of our household income, because of the turn stuff had taken. So, it could trigger me too. But to me, it's not about that. I actually, leaving was going with the show. I apologize. I know you wanted to make a point. No, it's okay. Really, I'll say just a couple more things about it. Number one, like more than how it affected me personally. I'm grateful to like move on with my own content. You know, T Square and I together with our own content and our own business. And more than anything, I just I feel, look, I saw things that not everyone saw. You know, like, yes, Coins paid him to shill. They do that with every YouTuber. But the thing is, you know, he did disclose, but I don't even want to get into all that. My main point is, like, people think that, you know, he dumped all the time. He he wrote all of his bags. He round tripped all of them. Everything that he got paid for content for, like, he round tripped those bags because he thought that he always continued to think that the prices were going to go higher, right? So there was actually other people in the building that were doing the dumping. I'm just being honest. Anyways, more than anything, I just look. He had a lot of his flaws, but he was to us very generous. Even very caring. I know it sounds crazy to say, but he was. And I don't like seeing. Yeah, he sold virtuals protocol early. Yeah, but I mean, but virtuals wasn't paid content. Might have gotten airdrop. I don't know. But more than anything, I don't like to see anybody like have such a spiraled mental health decline. Like, I don't want that for anybody, is my point. You know, even if that person is villainized, even if that person caused or played some part in, like, a lot of people taking loss, right? I'll get on with the show. But I do want to say, like, as a big supporter of, like, the Cardano community, any of that stuff, and I argued with him about it the whole time. But he was convinced that, you know, he was talking to one of the most powerful people in the world, Mr. X, and that person told him that, you know, bad things about Charles and all this stuff. So there was nothing I could say that was gonna change his mind. All I could do was, like, choose that I wasn't gonna write about it. You know, anyways, crypto really messes with everyone, even those that think they are smarter than the rest, sometimes especially those that think they are outsmarting others. I can imagine the guys losing a lot. Yeah, and look, that's what it boils down to me. I get all of the problems, I really do. I get it more than most people. But man, like, I don't like to see anybody take that sort of spiral, that deep of a spiral. Like, it's who was Mr. X? Did you know? Can you tell us? Yeah, I mean, it's nothing that he hasn't said publicly. You won't really find the guy on the internet, but it was a guy by the name of Mark Ufford. That, you know, and, you know, the weird thing is that you can search for him on, like, LinkedIn was how he communicated, and you can try to search for him, but you won't find anything. But if you go log in through, I'm starting to worry I'll go crazy from greed and all. Yeah, if you go in through, when you went in through Ben's LinkedIn, then you could see all the messages with him. And other than that, it's hard to find the guy. So it's there are some weird things about the guy. I do, like, the guy was real. That is a fact. I've seen it with my own eyes. It wasn't made up. But do I think that the guy was who he said he was? Do I think he was, you know, the most powerful person in the world? No, absolutely not. I don't believe that. I believe that the guy was connected, but greatly exaggerated that, and I think he played to Ben's ego, right? Like when you know that someone wants to be the most important person on the internet, and you can tell this guy that he's talking to the most powerful person in the world, it appeals to ego. And that's what he did, was he appealed to Ben's sense of ego and to his naivety, and he convinced him that he was talking to the most powerful person in the world. Do I believe that that was true? Absolutely not. So there you go. Was the guy real though? Yes. Yes. Someone those messages. It wasn't made up. I've seen them myself, and still to this day, I have access to an entire spreadsheet of them. And no, I'm also not going to share them because it belongs to a Google Drive that is not mine. Okay, that's the reason I'm not going to. So, and also, I'm not saying, at the very end. Anyways, I'm gonna move on from all that. Thank you, JG. Hey, I'm trying out here, but good question, DCA and Prey, because that was man, anyone that was watching that online knew how much of a saga that thing was. Yeah, he says, I'm starting to worry I'll go crazy from greed in altcoin season. You gotta have people around you that you just outright trust. Priest, wife, brother, etc. Somebody that has known you a long time. Yeah, and this is why greed is always the enemy. And someone that I really like and really have a lot of respect for on crypto YouTube is Jeb, Crypto Jeb. And you've been around for a while, I gather, so far from all that you've said. Well, yeah, I got into crypto in January 2020. And I went really hard into it. I didn't have a lot of money at the time. I invested $3,000. It was all I could scrape up. I wrote it up to 15 grand, wrote it back down. But, September of that year is when, my wife and I started working for Hit Network. At first, it was just her because she was the one with the editing skills. But later at the script right before the split, and then when the split happened, we went with Ben. And I know, look, there's issues on both sides of that split. So we did what we did because, hey, in blockchain, you have a conviction about ownership, right? Like in blockchain, we want, it's like stuff.io on Cardano. The reason I love stuff.io is because it gives artists and musicians and authors real verified ownership over their property, right? And at the end of the day, Ben started that channel. He was and he was still older when everything happened. And so as a matter of conviction about ownership, we made a decision, right? So I don't think somebody's channel should be stripped from them like that. Regardless of, if someone doesn't like you, right? That's why capitalism is supposed to work philosophically. And I don't put air quotes around it because I think there's a better system. I wouldn't want to live in any society other than a capitalistic one. I just think that everything, that all of man's structures and systems are tainted by sin. So I just think that there is no perfect system. However, the thing that is supposed to be ideal about capitalism is a free market, right? So if you have a company that sells shoes and they want to preach a gospel of woke ideology to the world, well, if you don't like it, don't buy the shoes. Right? We don't have capitalism. We privatize profits and socialize losses. Yeah, no, I agree with you. But I'm just saying, in theory, like, what's supposed to be ideal about capitalism is the power of a free market. So I don't think anyone's channel should be stripped from them. I think that if everyone, if it's so obvious, and it always, and I don't mean hindsight, it's all obvious in hindsight, right? What happened with Ben? It's obvious in hindsight, but not everything is that obvious in looking from the front forward. But if it's really true that everyone could just see all of the flaws and problems from the beginning, well, then don't watch, right? Let the free market issue a verdict on someone's manipulation of their audience or whatever the issue is. Let the free market, render the verdict on that, and just I don't know. Anyways, I like stuff. I got in a bit too early, dumped on me nicely. So I've been DCing. Okay, nice. Yeah. I do like stuff. It's one of my picks on Cardano. It's not one of my top picks, but I love it philosophically because of ownership. Anyways, let's look at a couple charts, shall we? Bitcoin on the weekly. And I've been showing this chart for some time now. This is the inverse head and shoulders on the weekly. Oh, that's what I was going to say. I really appreciate Jeb. And Jeb was saying, we were talking about greed. Jeb was saying that there's two ways that you get liquidated in the crypto market. A, you get liquidated because you're using leverage and the price hits your liquidation point, right? B, you get liquidated by your lifestyle. And so the bear market hits, or a period of long sideways correction hits, and you don't have enough capital to sustain your lifestyle. Now, I'm not talking about people that lose a job or have an illness or get cancer or something catastrophic happens. I'm just talking about your lifestyle. You don't have enough liquidity on hand to fund your lifestyle. And so when that disparity happens, you end up selling out of your portfolio because you need the cash. And the longer we go without a pump, that's happening to more and more people, right? So that is just one reason why greed is so catastrophic to crypto holders, right? And the Proverbs warn against greed. Coming back to the charts, we have this inverse head and shoulders pattern on the weekly, and this is why one reason why I do not think that we have topped. You draw this from the bottom to the neckline. You pull it up here, and you end up with about $168,000 as a target. So far, we are holding this neckline too. This is why $112,000 is such an important level for us to hold. And I want to see us closing weekly candles above this. If we break below it, I do think that the 21-week moving average at $104,800 is the next bounce that makes sense. So that's why I really want to see us hold this neckline. Now, if we drop and we bounce right back above it, I don't think that this inverse head and shoulders is invalidated. So let's go to the daily. And what we see on the daily is that the stochastics are wanting to reverse. You see the blue line above the orange line right here. So the Stokes show that there's a reversal that's possible here. Also, look at what happened right here on this dump on the daily. We came down and we found support at a key moving average, at the 50 moving average. And then we went on to make a new high, right? Now what's happened is that we've come down from that high and we've again found support above a key moving average. And that could take us down further. Right now that moving average sits at 111. So we could wick there. But what I'm hoping is that we again find support above this next key moving average at the 100. And this still keeps us above the neckline of that inverse head and shoulders. The 200 EMA the 200 MA sits at $100,000 right now, which we have now closed over 100 consecutive days above $100,000 for Bitcoin. So look, the prolonged of choppy action and sideways consolidation, it's hard. It tests your patience. However, it's showing that there is a sort of strength that Bitcoin is building that's starting to seem different this time around in the cycle. Like for over 100 days, if you went back to the last market and asked yourself if Bitcoin spent 100 days above $50,000, I don't think that it ever did. And I could be wrong. I haven't back tested that. I'm just, sort of going back in my memory, but I don't think that it did. Bitcoin is showing a real strength that is different from previous markets. But that is also coming with prolonged periods of sideways action and momentum building. Anyways, we come down to the 4-hour chart. And we have a bullish cross on the MACD. Call it by its government name, the moving average convergence divergence. We have this bullish cross on the MACD. What's really interesting about it is that we actually, I don't know if I can zoom in far enough for you to see it, but if you look at the histogram, which is the green and red sort of on the MACD, you see the change from green to red, and it was a very quick fake out. The MACD actually crossed bearish for a brief moment, and kind of like if you watch people that use Market Cipher, shout out to our very own T-Square. If you watch people that use Market Cipher, you'll see this like green dot, red dot, green dot. You'll see this indecision that happens where you have a bearish indicator that gets like invalidated with a bullish signal right afterwards. And this is sort of what we've seen on the MACD right now. So on the 4-hour, see, the thing is, on the 4-hour, we have to get above this 21 moving average, which right now is coming in at $113,865. So we need to see that break. The other thing that I like right now is that it seems like we have a bit of bull. on the 4 hour. And so we have a lower low on the, we have a slightly, we have a slightly lower low on the price with a swing down on the price with a swing high on the RSI, a swing up on the RSI. That's bullish divergence. Swing down on price, swing up on RSI. So what we need right now is that bullish divergence to get us above 113.8. I'm going to be really honest. You don't think they can hit 20? Oh, okay. You're talking. I'll let you guys battle that out in the chat. I'll be really honest. If we lose $112,000, and I probably won't even wait for a weekly confirmation. If we lose $112,000 on the 4 hour, I might close some positions at a loss and look to reopen them at lower prices. Because I tend to think if we lose 112 on the 4 hour, I tend to think we're going to go down to 104. Unfortunately, I really don't want to see that. And I'm trying every trick in the book right now on the charts to try to construct a scenario where we don't do that. But at least I realize, that that's what I'm trying to do. So I don't know. We had this bearish divergence up here that led to the dump. And I'm hoping that this bullish divergence over here catches us, builds some support, and allows us to begin to make our way back up. Now, we are so far double bottoming on the 4 hour and the daily at this level right here. So, really, I need us to come get above this 21 EMA or this 21 MA, and then I need us to take out this top green line at 114.8. And then the next level after that is the 200 MA coming in at 116.9. So those are the three levels that I need to try to take out in order to turn this ship around, so to speak. Let's go to the 1 hour. Now on the 1 hour, we've crossed bullish on the MACD. We're above the 21 moving average. Stokes are getting high. And we're wicking. We have a wick off of the 50 moving average where we've failed to get above it. So I would need us to get above that soon. But I like the bullish cross on the MACD. If that can continue to come up and we can get above the 0 line, I think that we may have something. What it all boils down to is the Jackson Hole speech tomorrow. And this is why I'm going to stream it live. It all boils down to this, because that's going to be the thing that either causes us to lose 112 or allows us to bounce from it. I think that we have more of the same action that we're having right now until the speech happens, and whether Powell is dovish or hawkish is going to decide what Bitcoin does from there. So there we go. Also, our charts segment get out of this, share this tab instead, and come over to our profile on X. Our chart segment is brought to you by BYDFi, Biddle Your Dream Finance. This partner of choice on the channel, and right now we have a new use it deposit bonus event where you can get $2,000 in deposit bonus. No minimum trading required, only deposit to your crypto futures account. So smaller traders have these deals. If you deposit $100, you get a $50 bonus without having to meet any trading requirements. You make the deposit, you get the bonus. $500 deposit gets a $100 bonus. $1,000 deposit gets a $200 bonus. For whale traders, a $5,000 deposit gets you a $500 bonus. $10,000 deposit gets you a $1,000 bonus, and a $20,000 deposit can get you a $2,000 bonus. And so the way this works is you deposit to your futures account. You make sure that you keep it in there during the length of the promotion, which right now runs through August 26th. And whenever they take the snapshot, which they take it periodically, they take the snapshot, you get your bonus, and then I would wait until the promotion period ends down here before you withdraw your deposit. But if you can certainly do that. You can let the promotional period end, withdraw your deposit, and then simply trade with the bonus that you're giving. The good thing about that is trade, or you're pretty risk off. Well, you just trade with the bonus that you're given, and you take it from there. And you hedge against your losses that way. Of course, I want everyone to deposit and trade with their whole deposit, and I want them to win their trades, of course. But like we get commission. So if someone deposits and trades with their whole amount, that's great. But I'm just saying, like, I don't want to see people depositing money that they need and then losing it, right? So, everyone's situation is different. And if you don't need to be trading with your deposit, then don't. You can still get your bonus and trade with that. So there you go. We will go up to the 120s again and then see L1s run, Bitcoin eventually. Maybe, or it takes a concerted run towards 77K. JG, Muff, I agree we could see this in Q1 2026. See, that's where I'm at, JG. Would you think that if ADA goes to $5, it would probably have a new floor of about $1, meaning it is still undervalued, possibly? Well, ADA dropped 94% or something like that in the last bear market. I think that those days are over. I think they're over, okay? But let me just go to my Google calculator and say, what is 70% of $5? So if Bitcoin drops if Bitcoin drops 50%, Cardano could drop 70%, and that would be a drop of $3.50, which would bring it to $1.50. So yeah, if it hits $5, it could drop 70%, and it could still hold above $1. That's an excellent point. Do not you? It could still hold above $1. If it dropped 80%, me see. If it dropped 80%, it would drop $4. I could have done that math in my head. So that would bring it down to $1 even. So yeah, like I definitely see a scenario in which $1 could be the floor of the next bear market. And when I put bear market in quotes, I don't mean that we're not going to have one. I just mean, you know, I'm going to try to clip this section from our interview with JJ's Cryptic Corner. But I see this scenario where we have an elongated cycle-ish, but it happens in a way where the strict 4-year cycle guys are able to look back and sort of say that this isn't truly broken. And then the super cycle or elongated cycle guys are able to say, look, the pump went into Q1 of next year. And neither side of the argument is going to be able to look back and have 100% evidence for their viewpoint. The 4-year cycle argument is still going to be an argument in 2028, for sure. And you know, here's where I see the cycle changing. Is the fact that you have diminishing losses, and Bitcoin went from a 90% drop in the first bear market to an 80% drop in the next one to a 70% drop in 2022, right? If Bitcoin only drops 50%, which the next increment would be 60, I get it. But if Bitcoin only dropped 50%, it would recover from that much quicker than a 70% drop. But part of the reason why the bear market is so grueling is because it takes a long time to recover from an 80% drop, right? But in the May crash, in the middle of the bull run in 2021, Bitcoin dropped 50%. And it recovered from that in a matter of months. So if we only drop 50%, the more that the losses diminish, the quicker the recoveries become. And we could see this scenario where we sort of have market cycles within larger 4-year market cycles, right? So we could see miniature bear markets and bull runs within the larger 4-year cycle. And that's where I truly believe that we're heading. I think that in the next bear market, we are going to see some inordinately large pumps, right? Because I do think that the market cycles are changing. But that's how I think they're changing. I don't think that it's going to be a clear, decisive break of the 4-year cycle. I think it's going to be smaller market cycles within the larger 4-year cycle. Do Not You says, I've been struggling to DCA and my purchases make less and less of a difference. But I know every ADA I can get 2 to 5x, possible 10x, and still hold above my DCA. Well, look, I don't think that it's a bad thing that you've been dropping your DCA, right? The reason why is because we have to manage greed. We have to manage emotion. And so you don't want to get liquidated by your lifestyle. You don't want to put so much in that you end up later down the road saying, hey, actually, I need some of this to live on, right? Like you want to be able to have your investment pile and you want to have enough liquidity on hand to weather a bear market if it can come at any point. So yeah, you don't want to get liquidated by your life. And as the more the price goes up, the more it justifies lowering your DCA. I don't think that's a bad thing. been thinking the math for a long time that I'm very bullish on buying ADA anytime it is under $1. I agree with you. I absolutely agree with you. And this is why I've literally rotated out of my other positions and consolidated my portfolio for this bull run almost entirely into Cardano. I do have some small plays still on XRP, Ondo, and Render, but the vast majority of my play now for this cycle is in Cardano and then Cardano ecosystem. Indigo, Iagon, and those are my biggest ones. I have some smaller like, drops into all kinds of stuff, stuff.io, Palm Economy, MinSwap, Strike Finance, but amounts that it's not going to make a huge difference. Like Indigo and Iagon are my only Cardano ecosystem hold that I'm really going to make up. So, but yes, that is my point. I only buy with cash that's not needed. I'm so careful about the subject that I have 3-month expenses set aside. ADA, dude, I love that exact setup right there. I love that exact setup. I am, every day that goes by, I'm becoming more and more of a Cardano maximalist. I say that as a joke. Look, like the interoperability is the future, and there's enough room at the table for everyone to play. I am, and I will also trade any coin that I see a good setup on. So, I'm very bullish on a lot of coins, but I have the highest conviction in Cardano, and it hasn't had its real move yet. So that's why I'm really sort of all in ADA for the rest of this cycle. Meaning when my savings surpass a total of 3 months expenses, that money goes into ADA, exactly. So there we go. Let's wrap this up with a Cardano spotlight. And come to taptools.io. And the volume is coming in for the last 24 hours with SNEC taking the highest spot at $500 million, followed by Strike, Flow, IUSD, and Indigo. IUSD is Indigo's synthetic stablecoin. So there you go. India is doing damage. And then you have USDA, DJED, and USDM, so stable coins. And then, the next big ones are World Mobile Token and Iagon. World Mobile Token, by the way, even though it is its own chain and it's cross-chain now, most of its trading still happens on Cardano. The vast majority of it, well over half. So, there you go. Now, Shen could be an interesting play here because it's a way to sort of go in on Cardano with leverage and not get liquidated. The reason why, if you don't know what Shen is, it's the reserve coin for DJED, right? For the DJED stablecoin. It's the reserve coin, and what happens is that as Cardano goes up, Shen goes up, it's 4x whatever Cardano goes up, and it's pegged to happen that way. It's part of the algorithmic. It's part of the way that the DJED algorithmic stablecoin, gets its reserve. And so if you do buy Shen because you're betting on ADA going up, it's a way to sort of 1.4x leverage your ADA. So something to look into. NewNet, NTX, is also something that I have a little bit of, and it's in the AGIX, Ben Goertzel AI ecosystem, and it's distributed storage, and I think it's going to do very well. Come back over to Twitter, and we'll search a couple of accounts on Twitter. Share this tab instead. I'm just making sure I don't miss any news here. Indigo has officially surpassed $50 million in total value locked. SNEC hit its old all-time high without on Binance or Coinbase yet. Well, I think those listings are coming. Cardano is quietly becoming the world's most robust interoperable blockchain. So something that we didn't see coming was that Cardano is doing Polkadot better than Polkadot now. And it's taking this idea of partner chain and literally anyone out there, Algorand could become a partner chain. And it's like trustless interoperability is going to make it to where, you know, it's going to make it to where all of the value proposition in crypto, I'm using a little bit of hyperbole, but tons of value proposition outside of what's natively on Cardano is still going to come within Cardano's orbit, right? And this was the thing that Polkadot failed at, was partner chains. Polkadot was branded as a layer 0, and it was a layer 0 because all of the partner chains were supposed to be their own layer 1s, right? Well, I mean, honestly, Polkadot hasn't done anything. And now Cardano is going to take this idea of partner chains further than what Polkadot ever could have done. Sunday is pretty low, thinking of trading and getting just a bit more. Yeah, I don't have any Sunday, but that's probably a good idea. Let's see here. One more account I'm going to go to, Stake with Pride. I'm looking for a specific post. Here it is. Earn night with your ADA. Pride will be a midnight validator. Stake with Pride. So, everyone that stakes their ADA on chain, I stake on chain. You need to go find out if your stake pool operator is also going to be a midnight validator. Because if they are, you're going to earn midnight. You're going to earn night tokens every 5 days, right along with your ADA. So you stake your ADA and you earn ADA and night every 5 days. So there's no reason not to make sure that you're not going to be benefiting from that. POK seemed very very scammy at the beginning to me. Like, it literally came out of nowhere and surprised ADA and others was talking about everywhere. Yeah, exactly. So there you guys go. It's been an hour and a half. I'm going to dip out. And thank you, as always, for joining the Blockchain Brew Show. Thank you for being a member of the Brew Crew, the most hydrated community on crypto YouTube. And we'll see you guys tomorrow night, and we'll see you guys for the Jackson Hole event as Pal speaks. Stay hydrated.